Coming up on Business Incorporated. Moody's affirms Africa Development Bank AAA rating with stable outlook. South Africans to pay more for fuel starting tomorrow. Uganda's headline inflation dips in October. And first, we kick off with the markets now in Africa, where it's mostly positive for Nigeria, South Africa, and Egypt, the main index at intraday. However, Kenya closed Monday's trading session strongly negative, down by more than 1.20%. And in the Middle East, trading was also positive at intraday. Saudi Arabia rose by 0.08%, while the Qatari index dipped by 3.9%, a big move down there. But elsewhere in the region, the Abu Dhabi index rose by 0.66%, while Dubai's index gained 0.87%. And over to the UK now. Let's cross over now to Juliana there standing by. Well, Juliana, France seems to be in a post. All right, I don't think we have Juliana right now. All right, let's move over to the Asian markets. Shares in Asia Pacific were mixed on Tuesday as the Hong Kong listed shares of Chinese real estate firms fell and amid the renewed fears. By the market close in Hong Kong, China Evergrande's group stocks fell 2.9%, while China's Vanke tanked by 4%. Sunac China Holdings also plunged 9.6%. Mainland Chinese stocks closed lower. Shanghai Composite slipped 1.1% to 3,505.63 points, while the Shenzhen Composite declined 0.68% to about 14,377 points. Elsewhere, South Korea's Kospi jumped 1.16% on the day to 3,013 points, leading gains among the region's major markets as shares of industry heavyweights Samsung Electronics jumped 2.29%. And stock futures were basically flat in early morning trade on Tuesday after the S&P 500 eked out a fresh record close on Monday to kick off November. Futures tied to the Dow Jones Industrial Average were up by 18 points. S&P 500 futures were flat. The Nasdaq 100 futures was lower by 0.2%. All three major U.S. stock indexes hit new intraday highs and closed at records during Monday's regular session as investors continue to bet on year-end rally despite supply chain issues, COVID risk, and a Federal Reserve that's about to indicate it's going to pull back on some stimulus. The Fed's two-day meeting begins Tuesday, and the Fed, at the conclusion of its two-day meeting tomorrow, is expected to announce it will begin unwinding its $120 billion monthly bond purchases implemented during the pandemic. All right, let's head on to the UK now with Juliana. Great to have you, Juliana. Well, France seems to be in a post-Brexit fishing feud with the UK. Apparently, a British boat was impounded in French waters. What's going on?
Well, what's going on is that Macron and Boris Johnson are in a full-scale spat, a spat that nationally, domestically, helps both of them, really. Boris Johnson, of course, is trying to overhaul some parts of the withdrawal agreement and their elections coming up in France. And there have always been tensions between the Brits and the French. But as it pertains to the fisheries agreement, there was supposed to be a resolution that was outlined in the Brexit withdrawal agreement, but both sides have varying interpretations of exactly how many boats are allowed in certain parts of the water to fish. So much so that the French decided to detain a British vessel last week, and they also fined another one for not allowing police to carry out a thorough research. Now, really, this goes down to some aggravations on the French side. they believe that not enough permits have been given to French fishermen to fish within British waters. Now, according to the Brits, they've given about 98%. France says they've only given about 90%. And it is becoming a little bit sticky because we know that when it comes to fish and trade, in Britain, it only accounts for about 0.01% of GDP. And with France, it's 0.06% of GDP. It does seem as if some of the simmering tensions have become a little bit muted because of COP26. During the G20 gathering over the weekend, I believe some heads of state asked them to set their differences aside because, of course, COP26 is a once-in-a-generation type of summit, and they didn't want a row between allies to overshadow some of the agreements. So some of the sanctions that France was supposed to put in place today have been set aside by the French president, and we're hoping that negotiations that are ongoing will be able to put aside this fishing war that, again, some commentators do suggest do benefit both Boris Johnson and French President Emmanuel Macron.
Right, big fish war there. Anyway, let's look at fashion now. Retail investor backed by the private equity giant Apollo Global Management is in talks to buy a big stake in Misguided. What are you hearing about this deal?
Yeah, this is an interesting story, still developing. Altari investors, they've backed out several British firms over the past couple of years. Most notably was Benson's for Beds a couple of years ago when they were on the brink of collapse. And it does appear that Misguided, sad to say, could be heading that way. It's actually been around for a couple of years longer than its competitors, such as Boohoo and A Pretty Little Thing. They opened up their doors in 2009, but it has obviously become exceptionally competitive, and it's been really difficult for them to keep up with the kind of juggernauts in this industry over the past couple of years. Their recent trading updates have been pretty much underwhelming. There were some reports earlier this week that JD Sports, the sportswear fashion line that's done exceptionally well and continues to climb above its competitors, they were in talks to buy them out, but I believe those talks led to nothing, and so now it's over to the turn of Altari, and I believe that the brand is really hoping that they can get a bailout at the last minute before they'll have to collapse.
Right, and I see some FTSE 100 stocks are making the headlines at this hour. How's the market looking?
Yeah, the market's still in the red at intraday. It opened that way at early trading. One of the biggest fallers dragging down the blue chip index is Flutter Entertainment. They're the sports betting giant. Unfortunately for them, but good for the pundits, they've had some very unfavourable sporting results recently, so they've had to pay out big. Investors don't like that, which is why their shares were down about 7.5%. But at intraday, the all-share laddie is down 0.47%. The FTSE 100, that's down by 0.55%, and the FTSE 250 is down by 0.27%. In the currencies market, the British pound also down on the US dollar by 0.17%, down on the euro by 0.12%, and down on the Japanese yen at intraday by 0.54%.
All right, Juliana, always great to talk to you. Thank you so much for the update.
Thank you.
All right, let's head on to Europe. Well, let's see what's happening in Frankfurt there with Chelsea Delaney live in Frankfurt. Great to have you, Chelsea. Well, there's new data out today on the health of the European manufacturing sector. Supply chain issues remain a major problem. How are the EU factories faring right now?
Well, the supply chain disruptions are making it increasingly difficult for factories here in Europe to keep running. In these latest reports, we saw manufacturing activity across the Eurozone decline for the fourth consecutive month. And that was true across pretty much every major European economy, whether that be Germany, France, Spain. They are really having trouble just sourcing enough materials to keep their production up and running. We saw in these reports that the delays for getting raw materials are at their longest points in one of their longest points in the history of this data. So many companies are facing delays if they're able to get raw materials at all. We've seen this here in Germany, especially, which is one of the most manufacturing dependent economies in Europe. We've seen, for example, automakers basically shuttering some of their production lines for months, for weeks, because they just don't have enough products and materials to keep running. We've also seen in these reports a lot of pessimism about the future. Many of these manufacturers, many of these companies are not expecting the situation to improve really within the year.
All right, let's look at the supply chain giant. They've seen a windfall of the world's largest shipping company, that's Maersk, which reported earnings today. Tell us more about that.
Well, Maersk is really the flip side of this coin. So Maersk is the biggest shipping company in the world. They handle about 1 in 5 container ships around the world. As we know, there's major demand right now for shipping containers, and that's been benefiting this company throughout the year. They've reported record earnings after earnings, and in this latest quarter, they saw revenues rise by almost 70%. Their earnings tripled, so really a blowout quarter, and that's driven by the demand for their shipping containers. We've seen rates basically triple in the past year. They have sounded a bit of concern, though, about how bad the congestion is getting across supply chains across the world. So they've said that because of the port congestion we're seeing, in the U.S., here in Europe, and in Asia, really at every major shipping thoroughway, they're starting to see issues with that as well. So they're warning that because of that, many of their ships are just waiting in ports. They can't get those running. They can't keep deliveries going because they're just waiting for ships to be unloaded. So they're saying that could potentially sort of hinder their volume and their activity next year. But one thing that they're looking at is potentially building out an air freight business. They announced today that they're going to be buying a German logistics company. They also said they're going to be buying 2 Boeing planes so that these can be air cargo vehicles. So this should help to some degree ease some of their congestion, and that's obviously a booming market right now. But they do expect the congestion on the seas to last at least until the beginning of next year.
Right, and the Maersk is actually has a front row seat to the global supply chain issues. Has it given any insight on when it expects, the disruptions to end?
Well, they're also feeling pretty pessimistic about this. For this year, they've said that they do expect demand to rise. They actually raised their forecast for global volumes through the end of this year. For next year, they actually lowered that, which is maybe a bit of a surprise. So they do expect demand to start to slow in 2022. That's in part because of this congestion that we talked about, because they're having, a lot of their shipping containers, a lot of their ships just stuck at ports. That could impact their volume. But they're also saying that we could see some of this demand in general start to slow down. That's in part due to inflation. So the rise in prices we're seeing around the world could start to eat into that demand. We could start to see demand for products cool as well. They say that we could just start to see a normalization from the bounce back in the pandemic. So once things started to reopen, we've seen really surges in activity, surges in consumers buying things. They say that could start to slow next year. So they do expect potentially by the middle of next year for things to start to ease.
Thank you so much. I'll talk to you tomorrow. All right, after the break, our commodities market update is next. Do stay with us. Welcome back. You're still watching Business Incorporated live on Channels Television. Now to our commodities market update. Cost of food commodities that make up a typical breakfast is soared to its highest point in a decade. According to the Financial Times Breakfast Indicator, based on futures prices for coffee, milk, sugar, wheat, oats, orange juice has shot up 63% since 2019. The move that has accelerated since this summer. Back here in Nigeria, the average cost of breakfast commodities such as bread, egg has risen over 50%. What are the drivers of this surge? Let's have this conversation now with Maiwa Ige, analyst at Financial Derivatives Company. Great to have you on the program.
Hello, Buddy. Thank you for having me.
Yeah, so breakfast is considered to be the most important meal of the day. And back in Nigeria, the average cost of breakfast commodities such as bread, eggs, and yam have risen by about 50%. What factors are responsible for this rising cost of breakfast?
Well, when we consider, like, generally, you know that the challenge of urban living in Lagos, for instance, is that breakfast is a luxury now. But however, the pandemic has changed things a bit. With the pandemic, we saw a stronger demand for breakfast globally, not only in Nigeria. And this is because people were home and consuming breakfast from home. And also, even now, you still have the work from home going on for quite a number of people. And so they're still consuming breakfast. And so there's a higher demand for commodity breakfast staples and commodities that are used to produce breakfast staples. And then looking at Nigeria, for instance, if we look at the breakfast index, if we try to come up with one in Nigeria, like we have done in-house, the average cost of breakfast of, say, bread, egg, sauce, and tea for a family of 4 is about 1,500 naira. It was about 1,500 naira a year ago. Now it's about 2,500, which represents over a 60% increase. And so you look at food inflation at 19%. There's a disparity, which is why we have come up with this breakfast index, looking at Nigeria, trying to see the reason for this disparity. But globally, on the supply side, the reason for the increase in prices that we're seeing is down to about 3 factors. Number one, there's been poor production. There have been production issues. We have bad weather conditions that have led to low harvest in different major producing countries of, say, countries like Brazil, where coffee is produced. We've seen drought in Brazil, which has led to coffee prices increasing by about 60%. We see sugar, a drought also affecting sugar production, and that has led to the increase on that part. Also, number two, we also look at the issue of supply chain constraints in transporting these commodities from the producing areas to other parts of the world. And lastly, we can also consider the fact of higher production costs. For companies that produce breakfast staples like Nestle, P&G, they've had higher production costs. And this has led to them increasing their prices to consumers. And also, they're even still saying that there will be an further increase in prices of breakfast staples in the coming year.
Well, that's quite interesting. Well, when there's an increase in a price of a commodity, it normally leads to a reduction in demand and maybe a shift to a substitute. What are these substitutes available here? Could we have maybe locally made breakfast commodities, or do we just skip breakfast?
Well, skipping breakfast is not advisable. It's needed. Right. You need that energy to achieve your activities for the day.
Exactly.
But they're looking at Nigeria. We would say that commodities like wheat and sugar are used to produce staples like bread. And you know that bread is used is a complement to a variety of different meals, usually with egg, butter, beans. And so with bread, there's a limit to how much people would shift away from bread. Well, okay, let's say there's a shift to there could be a shift to other commodities like yam and beans. But I do not think that shift will not be significant. It wouldn't be large. And the reason for this is because the prices of all these other locally produced commodities have also increased over the year. We have a cup of beans with price increase of over about 100%. Well, yam is in season, so so the prices have dropped. So people can use yam, plantain. But then generally, the shift wouldn't be that large because we're also having production issues in Nigeria, and that has also affected the prices of locally produced commodities.
I guess, as they say, there's no poor man's food anymore. Well, Nigeria's strategy to combat its deteriorating external positions has meant to clamp down on unnecessary imports and forex restrictions. This import substitution strategy has led to higher prices of imported commodities. How successful is this? And is this strategy leading to higher inflation? Bear in mind that food inflation is now about 19.57%.
Well, when you say a policy, I think the first thing we should look at is how do we determine if a policy has been successful. The way we would determine that is by looking at the impact of that policy. Then looking at Nigeria currently, can we say that have we seen a significant impact? Has that impact been material or has it been insignificant, right? Years ago, this import substitution strategy was implemented, and probably over 10 years ago, and down the years, let's go back. The reason for this import substitution strategy was for us to attain self-sufficiency, boost our local production so we can attain self-sufficiency. And then years now down the line, now currently 2021, we have not really seen that impact. We are still a net importer of a lot of commodities that we use in locally. And so we can actually look into two. Either the policy was wrong or the policy the approach in implementing the policy was wrong. But then we can look at other countries who have also implemented this policy. Yes, other countries have done it and it's been largely successful for them. But then right now, the thing that we should look at is timing. The world is moving to an open economy and countries are concentrating on producing commodities where they have comparative advantage in. And so Nigeria needs to be looking in that direction now because it's a thing of timing. And so for us, maybe a successful tool to shifting consumer preferences to locally produced goods is for us to let the market forces determine exchange rates. When that happens, if the prices of imported goods are too high, people will shift to locally produced commodities. And also it would actually encourage local production because people would want to export and earn foreign exchange. And so we see more people going into local production to satisfy local demand and also to earn foreign revenue.
And I'm wondering how it's affecting lunch and dinner. All right, Maya, always great to talk to you. Thank you so much for that.
You're welcome.
All right, moving on now. Our global ratings agency, Moody's Investors Service, has affirmed a AAA status with the African Development Bank on a long-term issuer and senior unsecured ratings with a stable outlook. In a rating action note dated 28th of October 2021, Moody's attributes the latest affirmation to the AFDB's robust capital buffers combined with superior risk management, very strong access to funding, very high support from regional and non-regional shareholders to support its development mandates. International rating agency has also noted that the bank's liquidity buffer is amongst the strongest within the AAA-rated peer group, with liquid assets covering 101% of net cash outflows over in the 18-month horizon. And South African motorists will, from Wednesday, 3rd November, pay an extra 121 cents for petrol, taking the price to 19 rand and 54 cents, pushing it closer to the 20 rand per litre mark. Price of diesel will also increase by 148 cents. And the movement in prices is mainly affected by two main factors: international petroleum costs and the movement in the rand-dollar exchange rate. Petrol has climbed by more than 5 rand per litre since January, when it was 14 rand and 1 cent per litre, to what will be a record high in November. And South Africa's state-owned ports rail logistics group, Transnet, has recorded a net loss of 8.4 billion rand for its COVID-hit financial year to the end of March 2021. The group says the performance was reflective of the economic circumstances faced by the company, largely due to the impact of the COVID-19 pandemic and related lockdowns, but stressed that the group remained a cash-generative business. Transnet added that their loss could have been lower had it not been for usual environmental management expenses, provision for unusual third-party claims, and impairments, which amounted to over 6 billion rand. Uganda's headline inflation declined to 1.9% from 2.2% in September. The decline comes at a time when there's been an increase in global commodities prices. This tempted some central banks across the world to tighten monetary policies. During the period, core inflation slightly decreased to 2.1%, down to 2.2% in September, due to a decline in services inflation, which fell to 1.1%, down from 1.8% in September. Non-core inflation during the period fell to 0.8%, down from 1.8% in September, due to a decline in food crops and related items inflation, which fell to 1.7%, down from 3.2% in September. Bank of Uganda says the risk of imported inflation from advanced economies could necessitate an early exit from the accommodative monetary policies. And Egypt has signed 7 grant agreements with the United States through the U.S. Agency for International Development worth $125 million as part of the Joint Economic Relations Program between the two countries. The agreements aim to bolster Egypt's development export in the fields of education, science and technology, agriculture, health, economic governance, trade and investment. The ministry is seeking to agree on a new partnership with U.S. aid in the context of achieving the goals of the initiative to bridge the gender gap, improve the work environment for women in the private sector, and enhance financial inclusion for women. And that's it on Business Incorporated. Thank you for watching. I'm Ladi Williams. Bye for now.